Now, welcome learners to our topic of today, lesson 1, income tax. So, income tax. I want to understand that this term is not too much new to us. So, in this case, we want to see or understand what is meant by income tax. So, in this case, this term has been derived from two terms, which is income. So, in this case, I'll define income and say income is the amount of money earned by an employee and by an employee. So, and in this case now, tax refers to the amount of money deducted from someone's earnings or income. So tax is the amount deducted from someone's who is an employee income. So in this lesson, I want us to see now how we're able to determine the income tax. We're going to see the scale that the government uses to deduct someone's or employees' money. Now, so at the beginning, I'm first going to define a few terms here and there, so that now we're able now to proceed with the lesson. So the first term we're going to look at is what we call the basic salary. The basic salary. So this is the money entitled to an employee in a given period of time. For example, this is the amount you agree with the employer that is going to be giving you after a certain working period. And in most cases, this basic salary can be given in terms of per month, that is the duration, or per annum. So it depends in the terms of work. In this case now, we have another term called allowances. So allowances, in my case, I'll define them as benefits. Beside the basic salary, the employer might decide to add you something small or give you a token for your daily routine and etc. So in this case, I'll say allowances are benefits. Benefits awarded to an employee. They're called allowances. For example, this person might decide to give you an extra coin for maybe for your rent or something. This person might decide to house you, so you're going to get things like a house allowance. Also, this person might decide, instead of you incurring your communication costs for your basic salary, this person might decide to give you maybe communication allowance. Let's say, for example, you as an employer, you are a commuter, you're traveling on a daily basis. This person might decide to give you what you call the transport allowance. So in this case, we see that allowances are benefits awarded to an employee. So on the same context now, we're going to see that regardless, these allowances are taxed. The allowances are taxed. Now, let's proceed now to another term called taxable income. Taxable income. Taxable income is the amount of money that one is entitled to tax. And we're going to see now how we determine the taxable income that I'm going to denote in the course of my lesson as TI. Taxable income as TI. So in this case, I simply say taxable income is the amount of money that is entitled to tax, the money that is deducted. So, okay, cut. Now, let's now move deeper again a little bit. Remember, we've said that taxable income is the amount of money that is likely to be taxed. Now, so how do we get the taxable income? I've said I'm going to denote taxable income as TI, to stand in for taxable income. We get taxable income by taking the basic salary, that in my course of teaching, I'll denote it as BS. So taxable income is given by the basic salary plus total allowances. For example, i.e., for instance, let me think of an employee who earns a basic salary of maybe 40,000 a month. And then you are told maybe this person is given house allowance of maybe 2,000 a month. The same fella, let's assume he's given what you call the transport allowance of maybe 1,500 a month. And for example, this person, maybe let's say this person is a secretary and maybe has to make crucial calls for the office. We assume this person is given what you call communication allowance of about maybe 3,000 a month. Remember, we said that these allowances are entitled to tax. They are taxed. So at the end of the day, we conclude that the amount of money these employees going to be taxed will be, we say taxable income is equals to basic salary, which is 40,000, plus total allowances that maybe are going to add up 2,000 plus 3, that is 5,000, plus 1,500, which is equals what to 6,500. So at the end of the day, we conclude the amount of money taxable income, so you have 40,000 plus total allowances, which is 6,500. So at the end of the day, you're going to have this person is going to be taxed a sum of 46,500. So this ends up to what? To the taxable income. And perhaps if we have other benefits, you add them there. So that's it. In the next segment, I'm going to show you how now we are able to tax this money using what you call the tax bands. The tax bands. I want us to consider the question right on your screen. So I believe it's well clear. So we have this person by the name James. We are told that James earns a basic salary of 38,000 per month as her basic salary. He's also entitled to a house allowance of 14,000 per month. He's a commuter, so he's given traveling allowance of 8,500 per month and medical allowance of 3,300 per month. And then, if you're able to look keenly, the table given there is taxing his money in Kenyan pounds per annum, per year. And let's have a close study. And the first question on that segment is requesting you to calculate James' taxable income per month. So take a minute and study the table. Now, good. So in this context now, allow me now. So we said this. Remember we said that the taxable income, which is now the TI, as I said before, we said is given by the basic salary, the amount of money this person is entitled at a given period of time, plus all the allowances. I want us to do that question. It carries 10 marks. So I trust we're going to follow the process. So in this case, you are told James earns 38,000 per month as a basic salary. On top of that, he's given a 14,000 house allowance. Also given a traveling allowance of 8,500, and also given a medical allowance of 3,300. So in this case, we're going to get the total as, let me get my calculator. Now, so let me get the total. That is 38,000 plus 14,000 plus 8,500 plus 3,300. So my total adds up to 63,800. This is the taxable income. 63,800 is the taxable income per month. The taxable income per month. But remember, our table is taxing per annum. So to get the amount taxable in 1 year, so you're going to have 63,800 times 12. So that adds up to what? Answer multiplied by 12 adds up to 765,600 Kenya shillings per month. Another factor to consider is that our table is taxing in Kenyan pounds. And we know that 20 Kenya shillings is equals to what? Is equals to 1 pound. So in this case, We also consider converting these taxable income per year into Kenyan pounds by simply dividing that by 20. So we get that the amount of money that's supposed to be taxed is equals now to this divided by 20. So answer, that is 7658 600 divided by 20. We're going to get that the taxable income in Kenyan pounds per year will be 38,280 Kenyan pounds. Now, I want us now to see how we treat these in reference to the table that is popping on your screen. We want to determine the amount to be taxed per year in Kenyan pounds. So I want us now to get back to the table because the second part of the question is requesting us to calculate the payee if this person is entitled to a tax relief of 18,000 per month. If I can proceed, allow me explain what is meant by relief. Relief, this is the amount of money that is reduced from your tax. For example, we assume that after getting your tax, you realize maybe you're supposed to maybe pay a tax of 4,000, but now the government feels that this 4,000 might be too much, or maybe might be a burden to you, and the government decides to reduce the amount of tax by a certain amount. Let's say, for example, it reduces your tax by 2,000. So this is what you call relief. So at the end of the day, instead of you paying 4,000, you end up paying 2,000. So that relief, that reduction of the tax burden is called relief. So in our question there, we are told that this guy is entitled to a tax relief of 18,000 Kenya shillings, 18,000 per annum. So you're supposed now to calculate the pay. So getting back to our table now, we ought to know in that tax table, where does the amount of money to be taxed lie? For example, if I look at this table of ours, 38,280 lies at what band? Let me count. 1, 2, 3, 4, 5, 6, 7. It lies in the seventh band. So in this case, we are going to consider taxing from the first band up to the seventh band. Now, so if you focus on that table, on the right hand side, you'll be able to see we are told in every amount we have tax in Kenya shillings pound. Now, so in this case, first band, let me have my first band here. In the first band, we're going to have 2/20. Remember, we are told is tax per pound multiplied by 6,000. We're going to get the amount until now we get the seventh band. In the second band, we have 3/20 times the difference between the following number, which is 12,000, minus the upper number. So the difference is 6,000. In the third band, we have 4/20 times 6,000. So we get the value there. And then you have 24,000 minus 18,000. We're going to have 5/20 times 6,000. We get that value there. And then in the following band, which is now first, second, third, in the fifth band, we're going to have 6/20 times 6,000. In this case, the difference is consistent, but it's unnecessary. Do not consider that in all bands they are constant. You have to keep working. On the other side, we have 7/20 multiplied by 6,000. Now, in the last band now, where that particular figure lies, we do not take that following number over the number above. So what we do, we take the amount, the taxable amount, which is 38,280, we minus the number on top, that is 36,000. So the difference turns out to be, so let me see, I'm going to have, we don't now deduct from the consecutive number. We use now in the last band where that particular And that is the key point, by the way. I'm going to take now the amount to be taxed in that band, that is 38,000 minus the number on top, which is 36,000. But it has come to my notice that most of us will take now the actual number in that band minus the above number, which is wrong. So yes, so allow me make an emphasis again. Remember, we said that the taxable amount, which was 38,280, lies in the seventh band. So now when we get to the seventh band now, which is now supposed to be taxed in terms of 8/20, multiplied by the difference. The difference now we're going to get from that amount to be taxed minus the above amount, which is 36,000. So in this case, we're going to get the difference as, let me get the difference for you. We have 38,280 minus 36,000, and we get the difference as 2280. So, and then let's tax that one and see. So answer multiplied by 8 divided by 20. We get the tax in that band as what? 912. You get, you can confirm that. So, and then I'm going to get the sum of all these ones, so that now you can get all the accruing what? All the accruing tax. So let me get the sum all together. So we have 600 plus 900 plus 1200 plus 1500 plus 1800 plus 2100 plus 912. So in this case, the tax, the total, the gross tax, that is what you call 9,012 is what you call the gross tax. But now, if now we deduct, if we deduct what you call the relief, the burden reduced by the government for you, we get what you call the net tax, or the pay, or the amount of tax you're supposed to pay in that particular period, depending on the terms in your government. So in this case, I'm going to have, remember we converted the relief, which was 18,000 Kenya shillings per annum. Remember, we converted it into what we call into Kenyan pounds, divided by 20. So we found that the relief is 900 pounds. It's 900 pounds. So in this case now, I'm going to deduct it now from here to get the pay, or to get the pay as you earn. So in this case, I take 9,012 minus 900. So I believe you can get the difference, that you can now see the pay in that particular period minus 900. So this person pays a tax of 112, and that's adds up to our answer. Now let us now focus on that part on your screen. The part on the screen is telling you that besides the tax, this guy is also entitled to other deductions, such as the National Health Insurance Fund, that is NHIF, the pension scheme, cooperative shares, loan payments, and interests on loan. So in this context, you realize the government tends, we have compulsory deductions on those employees' salary. So, and they're given a collective term. Other terms, other cash deducted from salary are given a collective term called deductions. So in that, I see the question is asking you, calculate the James total deductions per month. We're simply going to take the NHIF, which is 320 plus 1,000 plus 2,000 plus 5,000 plus 500. These are total deductions. Let's see how the amount of money is also deducted besides the tax. We have 320 plus 1,000 plus 2,000 plus 5,000 plus 500. So in this case, this guy is also deducted. Remember, we are told they are monthly deductions. So in that particular month, this guy is deducted 8,000 820. Total deductions add up to what? To 8,820. Remember, it's monthly in Kenyan shillings as given. On the last part, we are told calculate his net salary per month. So allow me explain a term here. Let me talk about, before I talk about the net salary, let me talk about the gross salary. Gross salary. So this is the money the person earns before the deductions are made. Sorry, an error here. This amount of money this person is expected to get. But at the end of the day, this is not what this person gets. Something has to be pulled off from this salary. So in this case, gross salary is all the amount of money an employee expects, but then doesn't happen because this money has to undergo certain processes for the benefit of maybe of the country development and etc. So in this context now, so this now brings up another term called the net pay. So the net pay is now what this particular employee gets into the bank after all the deductions have been made. So how do we get the net pay? We get net pay by taking the gross salary, the amount of money the person expects, called the gross salary, and we deduct the pay, or rather the income tax, and we also deduct what we call the deductions, if any. So this formula we can also write this formula as net pay is equals to gross salary minus into brackets. Remember this bracket in this context is very important. We take the pay plus the deductions now. So now whatever now flows into this employee's account after all these operations, we get what we call the net pay. And in this context, I want us now to determine the net pay for this particular guy by the name James. Now, let's consider now getting what James receives in his account as the net salary. So we're going to consider the formula that I've just given. So we realized that James, in a year, James earns 38,280 pounds, right? So in this case, you say net salary is go to basic salary minus. We also found out that the amount of pay this person has to pay per annum is 8,112 pounds. Plus, we noticed that we're able to get his total deductions per month accrued up to 8,820. But remember, we are dealing with per annum, so you have to convert that one. You have to multiply 8,820 to what we call per what? To per annum. So let me do the calculation. 8,820 multiplied by 12. We're going to find that in a year, his total deductions add up to 105,840. But remember, these ones are in Kenya shillings, but we are dealing with pounds. So we divide by 20. So after now we work out this question, we're going to get the amount of money as net pay that James receives in his account. So in this case, we simply say this. After we work out, we're going to conclude. We're going to have 38,280 minus into brackets 8,112 plus, if you work out this one, you're going to get, it turns out to what? To 52.92. So at the end of the day, the net pay for this guy called James is equivalent to what? It's equivalent to 24,000. Is equals to 24,876 pounds, Kenya pounds per annum. But the question tells us to get his net salary per month. So we simply divide by 12 to see the amount of money as net pay he earns per month. Let us see. So we have 24,876 divided by 12. So we're going to have he earns 2,073 pounds. So if you wish, you can leave your answer in pounds, or you can proceed and give your answer in Kenyan shillings. So you simply multiply by 20. So this person earns a net pay of 41,460 Kenya shillings per month. And simply that's how we calculate the income tax. On the other side, when I get back the second session, I'll talk about other factors such as if a person pays premiums for an insurance, and also if a person is housed by the government and pays a certain nominal rent. We're going to see now how we're able to determine the house allowance from the nominal rent. Sorry. So till next time, stay tuned. Remember to subscribe, like, and share. Let's keep learning. Thank you.